Hey guys, what's going on? Welcome back to the channel. I hope you guys are well. My name is Camilo from Trending Waves, and what we're gonna do today is we're gonna review the SPY and the triple Qs. We're gonna use our preferred method of technical analysis, which is the Elliott wave principle. So if you guys are new to the channel, do me a favor, subscribe to the channel, give this video a thumbs up as it helps the channel grow, and I do thank you for that. All right, I do really thank you for taking your time to smash that like button. Also, now we have alternate accounts that we've been tracking in the SPY and the Qs, and these alternate accounts were suggesting that we were by now supposed to be heading towards the top, right? But so far we've just been hovering and then slowly meandering our way lower. So for that reason, we will touch base on that main count, which is this one here. But for now, we're going to operate, right? We're going to work under this assumption that this is the wave count at the moment, okay? And in this wave count, we are looking for further downside in the wave 4. Now, we have not completed the wave 4, compared to our main count, which suggests that the wave 4 completed on February the 24th because of this impulsive structure that we saw out of that level. But given that price action continues to the downside, all right, and is all damn near invalidating that count, we are then therefore discounting the possibility at the moment. So this wave structure here is suggesting still, right, 1 2 1 2 3 4 5 to the third, which completed back here on January. All right, now let's dive down to a lower time frame and let's dissect this price action here, which, by the way, we are looking for support at the 50 or 38.2% retracement. Okay, let's go down towards the 1 hour time frame. Let's reset the chart and let's quickly review. So the wave 3, guys, the wave 3 completed on January, okay? We then get our wave 1, our pullback into the 2, our big sell-off into the 3, pullback into the 4, and then a truncated 5th on the A wave, okay? That was our first pullback in this correction. We then get a retracement that yielded a, I believe it was a 618. Let's take a quick look. Yeah, a perfect 618 scenario here of fib retracement, which, oftentimes it is a good level, a common level for a wave B pullback. Okay, so we found the 618% retracement resistance of this entire decline, and then we sold off into the wave 1, 2, 3, ABC to the 4, and now we're forming this expanding triangle. Okay, now here we are. What are we looking for coming into this week? We're looking for further downside, and what we're looking here, guys, is if I may take you down to the 15-minute time frame, and we're going to focus our attention to this zone. So we can do this one of two ways. We can count that this is the B wave completed here, and this is the 1. Okay, the 1, 2, we're in the makings of 3, 4, and then the final 5th. But I am not a fan of that because this wave 2 pullback was very, very, very deep. So for that reason, we're going to call this as an A, B, and C of B, which came in at the 50% retracement support, or resistance rather, right? And now we're looking at a wave 1, a wave 2, and we're in the midst of the wave 3, okay? Then 4, and then the final 5th, that will come down towards the 406 to the $400 region in the SPY. Okay, so that's a lot of levels. That's a pretty good level or zone of support. Where does that line up with any type of support and resistance in price and in this price history? So for that, what we're gonna do is we're gonna take a horizontal line and we're going to overlay it right on top of the 100% of both Fibonacci extensions. All right, and we're going to zoom out a bit into let's go back up to the 30-minute time frame, and we're going to zoom out into price history. So now you can start clearly seeing here, by utilizing our support and resistance, that's technical analysis 101, right, and our Fibonacci levels with Elliott wave, we are able to identify a strong level of support. Okay, I mean, yes, clearly we can see that this is, that these are zones of massive interest, but because we have supporting evidence rather from two levels of trend, okay, we are able to identify that these two areas are zones potentially that we should be looking at. Okay, so I do potentially see price action coming on lower and into 406 to the $43 region in the SPY. All right, and just for shits and giggles, let's take a quick look at our main count. Okay, our main count is no longer valid at this point, I believe. All right, I'm just gonna delete these guys here real quick. And what do I say that? I mean, let me shut up because maybe I am wrong. But technically speaking, guys, um, this already has gone way too far. All right, and I am not a fan of a pullback this deep in a wave two correction. I mean, this is still also very important, not proportionate. Okay, we have a very massive, larger wave two to this wave one. So for that reason, I don't think this is wave one, two. We're gonna go in three. I do think that this is still an ongoing correction. All right, so but yet we still have this zone to break in order to invalidate this zone. But however, the reason why I am discounting this is because the Q's already invalidated that level. Okay, if we hop on over to that chart, we're gonna see that the Q's broke below its February 24th pivot. All right, so let's take a quick look at our alternate count, which suggests the same thing as in the SPY. All right, let's go up to the daily time frame. Let's quickly review. Here we go. So we have our wave 1, 2, 3, and now we're looking for the fourth. Back down to the 30-minute time frame. Reset this chart. Let's take a quick look at price action from our January highs. So just like in the SPY, ladies and gentlemen, we got the wave 1, 2, 3, 4 truncation in A. Okay, A, B, C to the B. 1, 2, 3, 4, 5, and 5, and then A, B, C to the 5 here. Now, I am highlighting this here for you guys because January 24th, February 22nd, and then March the 10th were 3 levels of resistance. So now we have this trend line that we have to break above. We have this resistance zone down here, and then we have our support areas that we need to be, we need to keep our eyes open for. The 618. Let's take a quick look at the green count, which I don't know where that fib level is, but we can take a quick look here. We take the extension from the high to the low to the wave B, and we get an equality, which matches right at, let me change this color, at the 618 of A and B. All right, so which is pretty cool, right? We see that there's a stack in fib levels here, and now like we did in the SPY, let's take a quick look at where that price action will potentially be. Okay, and I think I already have it highlighted somewhere here. Excuse the mess, this thing always does that. So you can see here that this zone is clearly an area of support and resistance, guys. So we got to keep our eyes open for the fact that this is going to be a break below. All right, we're gonna head on lower here. Okay, we're gonna head on lower to this $308, $306 region, and then we should be able to see price action head on higher. Otherwise, let me be the person of the bad news. If remember, this is the wave one. I'm gonna shut this off, right? Let me delete this, and this, because look, right? If this is 1, right, 2, 3, 4, and 5. If by any chance we start breaking below and do not hold the zone 306, the line in the sand, then ladies and gentlemen, I think that we are in store for a alternate version of this count, and that suggests that we are in a 1-2 scenario. So 1, 2, 3, 4, 5 of the primary. We're still in the wave A. We will see a retracement, however deep this will be, in the wave B, and then a sell-off in the wave C. Now this, ladies and gentlemen, while it may be a short-term pain, right, because it's a corrective wave 2, right, it'll take us deep into correction territory, even a short-term bear market over here, right? We may come down towards the 38.2, the 50%. Okay, we may go towards 290, 260. Okay, that takes us back here to September of 20, which is not good. Okay, but ultimately it will yield a third wave to the upside, and that is a potential opportunity to make new wealth. All right, guys, so be patient. I hope you guys are being cautious here in this market because it's very tricky at the moment to trade it. All right, if you guys want Elliott wave analysis for any of your charts, consider joining Trending Waves. The link to the Discord group is pinned down in the comment section. Okay, guys, so thank you so much for your time. I will see you guys tomorrow. Take care.